Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. We're going to again start today with a video of Tesla's robotaxi ride. I think this video is representative of FSD 13 and robotaxi in the geofence area of Austin. I've seen many videos like this one, and this is a representative video, and here it is. So let's play it together. Turn up your volumes, hit the like button, share with your followers, and let's get started.
And those chimes are new too. I've never heard those kinds of chimes before.
So I'm actually going to use this drop off early feature.
Okay.
So we started out with the chimes being new, and now this button seems to be a problem. Maybe it's a glitch, maybe it's easier to fix, maybe it's going to be hard to fix. We don't really know. But the fact that Tesla hasn't fixed this yet, in an extremely limited, just a few square miles in Austin, which is probably one of the best areas where they can pick, great weather, not many cars on a Sunday on the roads, well-defined lanes. Tesla has plenty of cars in the streets of Austin. They know exactly what the intersections are, what the construction situations are. They've been working on this for months and months, focusing on this for months and months, sacrificing progress on FSD, on customer cars. And this is the best they come up with for demo rides. So let's watch.
We can get out.
Oh, awesome.
If it will.
Are you close to the car now? Are you around here? Is that why you're using it?
Oh. Yeah, this is where we were going. Ooh, we are stuck we're stuck a little bit in the intersection.
Okay, there you go.
So after the rider selects drop me off now, the car pulls over, but it stops in the middle of this intersection. So yesterday we watched a video where the car stopped in the middle of the left lane, forcing vehicles behind it to go around it in an extremely dangerous situation. And today I'm showing you a second one that also is dangerous. I mean, who would want their Uber stopping in the middle of an intersection, a busy intersection, clearly, as you can see here. And later in the video, you're going to see that's literally in the middle of the intersection.
Behind this.
Okay, we're at the corner. Okay. All right, so off we go. We got dropped off. You got my bag?
Yep.
Perfect. All right, thank you, Diego. Thank you, buddy. Okay, so we're behind this bus stop here. And looks like we got dropped off right here at the corner.
I mean, look at this. There are cars passing by, and the robotaxi is sitting on the left side of the sidewalk. This is the intersection right here, and it's just literally blocking traffic.
Oh, let's see. Let's see how it handles this.
He is stuck. I totally found him.
Did you screw him over? Uh-oh.
I wonder if I had to, it was asking me to rate the ride, so I wonder if I had to finish that.
Did you finish it?
Yeah, I did.
Okay.
Yeah. Bad situation. The roadtaxi sat there for a minute or two, and then eventually took off. Who knows if the remote operator chimed in there to take over, but that is the situation. Let's switch to markets. Markets are up today. Dow Jones is up 1.1%. NASDAQ is up 1.5%. S&P 500 is up 1.1%. Russell 2000 is up 1.2%. Oil prices dropped sharply in the last 2 days. Oil prices are back down to 64. We're going to take a closer look at that in a little bit. You can see they're down $4 a barrel, with talks of some sort of truce in the Middle East. Still up about 5-10% from May. And the first half of the month, we're going to have 20-30% increase in oil prices. So inflation is going to be a little higher than it would have been otherwise when the June numbers come out in a few weeks here, in a couple of weeks. You can see the 5-year Treasury yield and 10-year Treasury yield is down a couple basis points. 10-year Treasury yield is now at 4.3%, which is good for mortgage rates, auto loan rates, etc. Let's look at the heat map. You can see here that chip stocks are driving the indices higher. Nvidia is up 2%, Broadcom is up 3%, AMD is up 6%. Financials are also higher. Microsoft, Apple up, Google up 2%, Meta is up 1%, Amazon is 2.3%, Tesla is down 1.6% after yesterday's 10% surge. Oil companies are down a couple percent, and everything else is mixed. Let's read our daily article. Wall Street indices climb after Israel-Iran ceasefire. U.S. tech indices rose on Tuesday as President Donald Trump's announcement of a ceasefire between Israel and Iran helped calm investor fears of a broader conflict in the oil-rich Middle East. Financial and technology stocks led the rally among S&P 500 subsectors, while energy stocks declined the most, tracking a nearly 5% drop in crude prices after the ceasefire announcement eased the threat of Gulf oil supply disruptions. By the way, we're going to go back to Tesla Robotaxi news, so please feel free to leave a comment and question, and I'm going to get back to it towards the end in about 20-30 minutes of this live stream. Defense stocks Lockheed Martin and RTX Corp fell 1.7% and 2.5%. Investors also assessed Federal Chair Jerome Powell's comments on monetary policy, where he reiterated that the central bank's wait-and-watch approach to interest rates as tariff-driven price pressures become evident. Trump's call for a truce marked a sharp turnaround after the U.S. bombed Iranian nuclear sites over the weekend, and Iran retaliated by firing missiles at a U.S. base in Qatar. Despite reports of both Israel and Iran violating the ceasefire through the day, investors have taken heart from the de-escalation in hostilities. The benchmark S&P 500 index remains about 1% below its all-time highs. We're going to get back to a couple of these comments from Fed Chair Powell, as well as other governors and members of the Federal FOMC. But let's first look at the oil prices. Oil prices fall 5% as Israel-Iran ceasefire reduces Middle East supply risk. Oil prices fell about 5% to a 2-week low on Tuesday on expectations that ceasefire between Israel and Iran will reduce the risk of oil supply disruptions in the Middle East. That ceasefire, however, was on shaky ground, with U.S. President Donald Trump accusing both Israel and Iran of violating it just hours after it was announced. Brent crude futures fell 5% to $68 per barrel. They're actually even lower now. That put both contracts on track for the lowest closes since June 10th, before Israel launched a surprise attack on key Iranian military and nuclear facilities on June 13. Explosions rang out in Tehran on Tuesday, despite Trump saying Israel had called airstrikes off at its command to preserve an hours-old ceasefire. You know, this is the critical sentence right here, is that the situation in Middle East is extremely volatile right now. So there's going to be some premium in oil prices, some premium in due to geopolitical risk, and it can change like this. I didn't like the fact that Israel unloaded right after we made a deal. They didn't have to unload, and I didn't like the fact that the retaliation was very strong, Trump told reporters. Prices also fell as Trump posted on social media platform Truth Social that China, the world's second biggest economy behind the US, can now continue to purchase oil from Iran. Israeli Defense Minister Israel Katz had said that he had ordered its military to mount new strikes on targets in Tehran in response to what he said were Iranian missiles fired in a blatant violation of the ceasefire. Iran denied launching any missiles. The 12-day war has triggered high volatility in oil prices, with Brent crude trading in a $12 range on Monday, its widest since July 2022. Both oil contracts settled more than 7% down in the previous session, having rallied to 5 months high after geopolitical issues. The direct U.S. involvement in the war also focused on investors on Strait of Hormuz, as we discussed yesterday. In other supply news, Kazakhstan's state energy company, Kazmunay Gaz, raised its forecast for oil output at the Chevron-led oil field. Kazakhstan is a member of the OPEC Plus group. Okay, prior to the outbreak of hostilities between Israel and Iran, we had been suggesting a bearish stance on mainly. All right, let's switch to Jerome Powell, who is testifying at the Congress. Powell repeats rate cuts can wait as Fed studies tariff impacts. I think this is the right approach, as I mentioned before. despite all the political pressure that he's getting. I mean, I've never seen political pressure like this on a Fed chair ever since I've been involved in markets in the last 2 decades. And it's unfortunate, but I think he's doing the right thing for now. Higher tariffs could begin raising inflation this summer, a period that will be key to Federal Reserve consideration of possible rate cuts, Fed Chair Jerome Powell told members of Congress on Tuesday. Pressed by Republican members of the House Financial Services Committee about why the Fed isn't cutting rates, as President Trump has demanded, Powell said, and many at the Fed expect inflation to start rising soon. And I'm going to demonstrate that in a little bit. And that the central bank was in no rush to ease borrowing costs in the meantime. Powell particularly said he would not open the door to a rate cut at the Fed's July meeting, as 2 of his colleagues recently suggested, or at any other session for that matter. I do not want to point to a particular meeting. I don't think we need to be in a rush, given a still strong labor market and so much uncertainty about the impact of the still unresolved tariff debate, Powell said. Referring to expected tariff-driven price increases, Powell said we should start to see this over the summer in the June number and the July number, which is, by the way, in line with what I've been describing on these live streams. It's going to take a couple of months for tariff to impact CPI numbers. So Powell says some June and then some in July. If we don't, we are perfectly open to the idea that the pass-through to consumers will be less than we think, and we do that will matter for policy. I think if it turns out that inflation pressures remain contained, we will get to a place where we cut rates sooner than later, he said. With the central bank largely sidelined, waiting for the outcome of the Trump administration's tariff negotiations. 1 second. Okay, let's continue. Powell was quizzed repeatedly about why the central bank seemed preoccupied with that issue and isn't cutting rates, given that inflation so far has been modest. Powell said the Fed policy isn't meant to endorse or criticize the Trump administration's approach to trade, only to deal with an inflation impact that the Fed and forecasts more broadly expect to gather momentum over the rest of the year. We aren't commenting on tariffs, Powell said. Our job is keeping inflation under control, and when policies have short and medium-term meaningful implications, then inflation becomes our job. All professional forecasters I know expect a meaningful increase in inflation over the course of the year, Powell said, elaborating on the Fed's reluctance to cut rates while major aspects of Trump's trade policy remain unresolved. In prepared testimony to the House panel, Powell noted that those effects could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. Following the release of Powell's testimony, investors paired bets that the central bank might cut its policy rates as soon as the central bank July meeting, which I don't think is going to happen, as I said yesterday, and increase the perceived odds of a rate reduction in September, with another to follow later this year. Powell's testimony, as is usually the case with his semi-annual congressional appearances, largely tracks the central bank's most recent policy statement, approved last week. Fed officials voted unanimously at that meeting to hold the benchmark interest rate steady in the current 4.25% and 4.5% range, and gave no indication rate cuts were imminent. New economic projections released at the time showed officials at the meeting expect 2.25-point rate cuts by the end of the year, in line with current market pricing. In recent days, 2 Fed governors, both Trump appointees, this is the critical piece right here. The 2 Fed governors who talked about a possible July cut are both Trump appointees, have said rates could fall as soon as the July meeting, given inflation has not yet risen in response to tariffs, while 3 Reserve Bank presidents said they still worry inflation will intensify over the rest of the year. Trump, who appointed Powell as chair in his first term, but is expected to replace him when his term ends next spring, has repeatedly called for steep rate cuts. All right. Now, Bostic, who I don't think is a governor, I think he's says Fed should wait on rate cuts. So he's kind of putting his weight on the chair's side. The Federal Reserve need not cut rates, with companies plan to raise prices later this year in response to higher import taxes and with job markets still stable, Atlanta Fed President Raphael Bostic told Reuters. I think we have some space and time to watch how the tariff and other policy debates evolve, said Bostic in an interview at his office in downtown Atlanta. He sees the Fed only needing to approve a single quarter point rate cut in late 2025, based on his view that economic growth will fall to perhaps 1%, 1.1% this year, and inflation return to nearly 3% by year's end. I think it can be more than 3% sooner than people expect, but let's see. Though some Fed officials say rate could fall as soon as July, and U.S. President, we're going to skip this part. We just read it in the other article. Now, look at the Atlantic. So this is Cleveland Fed's Inflation Now tool. Cleveland Fed's Inflation Now tool, showing inflation year-over-year percentage increase rising to 2.64% for CPI, 2.95% core CPI. I mean, I don't know how you look at this figure and still expect a rate cut. That's ridiculous. Core PCE is expected to be at 2.58%. Okay, so these are very elevated figures, and oil prices have been very volatile as well. So, and we still haven't really seen tariffs kick in. So I think we have a little bit of a problem here on the inflation front, and Fed Chair Powell knows this. Let's switch back to Tesla Robotaxi. Quick summary, and now we're going to read about Dan O'Dodd, and now look at China numbers, and then Troy's numbers for 2025 deliveries. Any questions, comments? Let's see. Meta says, that is evidence they are not fully ready. I agree. But remember, Waymo had similar hiccups. I agree. And that's why I think Tesla is 5 years behind Waymo. What people don't really realize, I think, like, I see a lot of this nonsense from Tesla bulls that Waymo has this high cost structure. What people don't realize is that Waymo currently is operating a couple thousand vehicles. And just like Tesla lowered its production cost per unit as it scaled over the last decade, Waymo will also lower its cost production per unit. Currently, somewhere between $100,000 to $200,000 per unit, generating slightly more than that in annualized revenue per car. I expect Waymo's cost per unit to decline to less than $100,000 per unit when they start bringing these Zeekr cars with fewer sensors on the roads. And they also have a US assembly plant now, Waymo, and that will ramp up to 20,000 units per year. When that happens, I think Waymo's cost per unit will be close enough to Tesla's that on a per mile, so amortized over the vehicle's lifetime, which is a couple of 100,000 miles as a robotaxi, per mile cost difference is just going to be a few cents. And that gap will be immaterial. And most customers will be more than willing to pay a few cents per more mile if it means better safety with LiDAR, with better experience, better HD mapping, etc., that Waymo brings to the table. So that's my theory. We'll see how it plays out. But I think the cost gap between Waymo and Tesla will shrink way faster than people realize. Okay, let's read this article. Tesla robotaxi incidents eyed by regulators as Waymo opens up service in Atlanta. The start of Tesla's robotaxi test apparently didn't go as smoothly as the company touted. Meanwhile, rival Waymo is expanding into another US city. In several videos posted on X.com, like the one we watched at the beginning of this live stream, you can go back to it and watch it if you want. Tesla robotaxis appear to violate local traffic laws by driving above posted speed limits, swerving across lanes, and hesitating to turn. In one instance, a rider named Rob Maurer posted a video in which a Tesla robotaxi enters a left turn only lane, then proceeds to go straight through the intersection and cross a double yellow line in the process, committing 2 traffic violations in the process. The NHTSA has taken notice. NHTSA is aware of the referenced incidents and is in contact with the manufacturer to gather additional information, a spokesperson said to Yahoo Finance. Under U.S. law, NHTSA does not pre-approve new technologies or vehicle systems. Rather, manufacturers certify that each vehicle meets NHTSA's rigorous safety standards, and the agency investigates incidents involving potential safety defects. NHTSA said following the assessment of the incidents, it will take any necessary action to protect road safety, adding that its investigations into Tesla's FSD supervised beta software remains open. Tesla is operating its limited tests in Austin, Texas, with select users able to summon Tesla Model Y robotaxis, all which 10 to 20 seem to be in operation, Bloomberg News was first to report on Tesla's robotaxi infractions. Alphabet's Waymo, considered the leader in the robotaxi space with 250,000 robotaxi trips completed each week with no safety driver, has officially opened for business in Atlanta. Via Uber, Waymo allows users to summon its robotaxis for driverless rides. Uber said in a post that riders will be able to travel across 65 square miles of Atlanta with plans to expand in the future. Riders who request an UberX Comfort Electric could be matched with a Waymo fully autonomous electric Jaguar I-Pace vehicle at no additional cost. Before a nearby Waymo vehicle is sent your way, you'll always have the option to accept or switch to a non-AV ride, Uber said in a statement. In addition to Waymo's Uber partnership in Atlanta, the companies continue to offer robotaxi rides in Austin. Waymo offers its robotaxi services through its own app in Los Angeles, San Francisco, and Phoenix, and will also be adding New York City to the list via a supervised test soon. Tesla hasn't revealed its next steps or when the general public will be allowed to summon a robotaxi in Austin. Musk has said he expects millions of robotaxis to be driving around by the second half of 2026, but the CEO has a history of making highly speculative predictions that have not come to fruition. I mean, that's lightly putting it. I think even the journalists are just, they're like scared of him or something. Musk has said he expects millions of robotaxis to be driving around by the second half of 2020. Not going to happen. But the CEO has a history, it should say a decade-long history, of making highly speculative predictions that have not come to fruition, especially on this topic. Any questions, comments? All right. Dan O'Dodd typed up a very informative article. I think this guy has been more accurate on FSD than some of the more prominent members of the influencers community of Tesla on X, plus Elon Musk. I would say all of the influencers plus Elon Musk combined times 10. Okay, so let's read what he says. Dan O'Dodd, Tesla's supervised robotaxi launch was a pathetic flop. I agree. Tesla's supervised robotaxi launch yesterday to much acclaim from the Tesla cult. Tesla's launch was limited to a handful of most loyal cult members who were given rides around the small area of Austin. I mean, that's how you know it's just not going to be representative. The videos that come out is just not going to be representative of the reality. Since nobody who was at the event has properly summarized the first day, we thought we would do it. The Dawn Project analyzed day one of Tesla's supervised robotaxi launch and reviewed material published by Dr. Know-It-All, Zach Herbert-On, Dave Lee, Chuck Cook, Sawyer, Farzad, Dirty Tesla, Bearded Toad, Joe Tegmeyer, Rob Maurer, Tesla Comics, Kim Java, and others. Below are our findings. Safety critical errors and driving errors on day one. I agree. In Rob Maurer's art ride, and there's a link to it if you want to watch it, you can. The supervised robotaxi failed to complete a left turn and panicked, whipping the steering wheel back and forth. It then drove on the wrong side of the road, failed to correct itself, despite there being two open lanes for it to move into, and continued to drive down the wrong side of the road. This is ridiculous. And this, again, for context, is probably the easiest area for Tesla to demonstrate these rights. In a video posted by Edward Niedermeyer, the supervised robotaxi phantom braked twice for a stationary police car. If another car had been directly behind the supervised robotaxi, this could have caused an accident. When Dirty Tesla pressed the button for the supervised robotaxi to safely pull over and let him out, it ended the ride in the middle of the road, forcing cars to drive around it. The supervised robotaxi then got stuck, and Dirty Tesla was forced to call Rider Sport. And I posted this video online, and you should see the replies. People just claiming that I'm getting paid by this person and that person, which is completely false. I mean, the only person that's paying me is Elon Musk through X payments, for crying out loud. And people accuse me of getting paid by Saudi Arabia or something, which is ironic because Elon is the one raising money from Saudi Arabia for XAI. This also happened for Farzad, who was dropped off by his supervised robotaxi in the middle of an intersection. Farzad's supervised robotaxi then became stuck and blocked at the intersection. During Herbert's own journey, the supervised robotaxi activated the hazard lights for no apparent reason while driving. Tesla has spent months preparing for this. Despite Elon Musk saying in 2019 that if you need a geofence, you do not have real self-driving, the supervised robotaxis in Austin are geofenced. Despite Elon saying in 2019 that HD maps were a crutch that should not be used, Tesla has mapped the geofence. Elon even admits that the supervised robotaxis are avoiding difficult intersections in Austin. An image from Tesla's control room showed Tesla has steering wheels to control the supervised robotaxis remotely. Tesla is now doing all of the things that Elon Musk and the Tesla cult constantly criticized actual robotaxi companies for. Chief propagandist of Tesla cult Omar Kazi previously called Motional and Hyundai's Las Vegas robotaxi service the world's shittiest robotaxi service for being limited to daytime operations, being geofenced, avoiding difficult routes, and requiring a supervisor in the car. Now, Omar effusively praises Tesla for doing all the things he criticized Motional for. Rather than fixing the critical safety defects in the millions of FSD Teslas currently endangering America's roads, Tesla's engineering team has been busy mapping a small Austin geofence. We even conducted a live demonstration a week ago showing that FSD v13.2.9, the latest publicly available version of FSD, will run down a child mannequin crossing the road while illegally blowing past a stopped school bus with its red lights flashing and stop sign extended. We have not seen footage of the supervised robotaxi interacting with a school bus. Despite Tesla limiting the supervised robotaxis to a small geofence, they also require the constant attention of a Tesla employee in the front passenger seat. Footage from multiple riders showed that the Tesla supervisors had their thumbs hovering over the door release button throughout the rides, which we suspect is a kill switch. The earlier Tesla posted a 40-second long video showing the supervisor's hand hovering over the door button the entire time. Tesla also admits that FSD on Model Y may suddenly swerve even when driving conditions appear normal and straightforward. Elon Musk says that Tesla's self-driving software is so far ahead of its competition that he can't see the second place with a telescope. He must be looking the wrong way. Reuters reported that Tesla deployed 10 supervised robotaxis in Austin yesterday. 10 supervised robotaxis committed 2 safety-critical errors in a half day of driving. That's 4 safety-critical errors in a full day. Elon said that Tesla will have 1,000 robotaxis within a few months. Not going to happen. At that rate, 1,000 supervised robotaxis would commit to 400 critical errors in a full day of driving. Elon also said that Tesla would have thousands of supervised robotaxis by the end of 2026. If Tesla deployed 200,000 supervised robotaxis, they would make 80,000 critical driving errors in a full day of driving. Over the course of a year, they would make 29.2 million critical driving errors. A post by Ashok Elaswamy, Tesla's VP of AI, showed that Tesla's supervised robotaxis had driven about 500 miles. In these 500 miles, the supervised robotaxis made 2 known safety-critical errors when they drove on the wrong side of the road and phantom braked. The supervised robotaxi only managed approximately 250 miles between safety-critical errors. By the way, that's literally what FSD community tracker shows, and that's what he says in the next paragraph. The latest statistics from the FSD community tracker reveal that Tesla full self-driving version 13.2.9 travels 327 miles between critical disengagements. Yesterday, the chief propagandist and the Tesla cult, Omar Kazi, confirmed that a new version of FSD, v13.3, was running on the supervised robotaxis. v13.3 is therefore worse than its predecessor, v13.2.9. A decade ago, between September 2014 and November 2015, Waymo traveled 423,000 miles and had 341 disengagements. That's 1,240 miles per disengagement. Now, Waymo travels 70,060 miles between critical disengagements, conducts 250,000 paid rides a week, and has served 10 million total rides, all without a single serious accident. 50 people have been killed in accidents involving Tesla's self-driving software, and Tesla FSD still hasn't driven a single mile unsupervised. Tesla spent months planning this. It limited the supervised robotaxi to a small area. It created a list of loyal cultists to invite. Despite all of these precautions, Tesla FSD is so defective that the supervised robotaxi drove on the wrong side of the road, phantom braked, and let its passengers out in the middle of the street while blocking the intersection and randomly flashed the hazards. What Tesla put out yesterday is not a robotaxi. It is a robotaxi infant that requires constant supervision to stop it from injuring itself and others. Tesla is laughably far behind Waymo and other real robotaxi companies. And I agree. I think this is very factual. You have the links to the videos. You can watch them if you want to. But I'm sure it's not going to stop people from criticizing me or Dan or others that present facts. Now, on the other side, coincidentally, I'm sure these robotaxi demos are coming at the end of a challenging quarter. And one of the areas that Tesla has been doing relatively okay is China. But even there now, because the EV growth has stalled out, because the major auto market growth has stalled out in China, now the market share movements start matter, and Tesla's losing market share. And you can see this in the Tesla Insure China from Tesla Chan, who lists the weekly numbers. We're going to look into the year-to-date numbers in a second, but he says that's fine and numbers don't matter anymore. This is the Tesla bull rhetoric, which is obviously complete bullshit. But let's look at the numbers. Year-to-date numbers, 246,730 for this year, which is below last year, below the year before, and this one didn't have the Model Y ramp. So it's back-to-back years of accelerating slowdowns. And this is the part where it's supposed to be super strong. Deliveries are supposed to be super strong, and they've stalled out. Why? Because Xiaomi is bringing in my opinion, it's because Xiaomi is bringing a new vehicle called YU7. In many ways, this vehicle is better than Tesla's best vehicles, and it's going to be cheaper than the Model Y. Also, Xiaomi's SU7, which is the sedan Model 3 competitor, is eating away at Model 3 sales. It's actually more than Model 3 sales now. So it's only a matter of time that Tesla sales in China will turn down, and also outside of China, where Xiaomi and BYD are allowed to compete. In the US, they're not really allowed to compete because of extreme tariffs. I think it's like 100%. But in every other market, I think these Chinese automakers are going to eat into Tesla's share at an accelerating pace. Now, because of that, Troy, one of my favorite Tesla analysts, says the numbers have changed since my tweet below. 1.6 million Tesla deliveries for 2025 no longer look possible. The analyst consensus is still too high for now, but it's expected to come down over the next few days. His estimate is below 1.6 million units. Analyst consensus of 1.68 million units. 2024 deliveries were 1.79 million units. So Tesla is shrinking at a very rapid rate. And by my estimate, Tesla is going to be 20% lower in deliveries in Q2 than Q2 the year ago. And I don't know how that's going to change in Q3 or Q4. All right. On that note, thank you very much, everybody. Appreciate your presence here. And I will chat with you all tomorrow. Take care.